Right, let's jump into this deep dive today. Um, we're going to be looking at Apollo Tyres' second quarter results for fiscal year 2025.
Okay.
We got their earnings presentation,
Right.
press releases, their financial statements.
The whole 9 yards.
Pretty much everything, yeah. And the mission is to figure out, what's really going on with them.
Yeah, like, are things looking rosy for Apollo Tires, or are there some bumps in the road?
Exactly, yeah. Like, are they cruising or are there some potholes ahead?
Yeah. What I think is interesting is all these documents, they paint a picture beyond just tires.
Oh,
Like, it's a glimpse into the bigger economic picture. Everything from, like, raw material costs to how consumers are behaving in different parts of the world.
Yeah, that's a good point. Okay, so let's start with the top line. Revenue's up a little bit year over year.
Okay.
2.5% to $64,370 million.
Uh-huh.
Sounds right.
It does on the surface, but if you peek beneath the hood a little bit, there's something that catches the eye.
Okay.
Their EBITDA, it's down.
Oh.
By a lot, like 24.3% lower compared to a year ago.
Whoa, that's a big drop. Okay, so their EBITDA margin, that's basically how much profit they're making on each rupee of sales.
Right.
Shrunk to 13.6%.
Mm-hmm.
It was 18.5% last year, same quarter.
Yeah.
So they're selling more, but making less profit. What's that all about?
That's the big question. It could be, lots of factors, but rising costs are most likely the biggest issue here.
Okay.
I was looking at their operating highlights Europe slide, and it shows their raw material costs in Europe have spiked.
Oh, wow.
Like 15% compared to last year.
Yeah. No, that's huge.
15% jump. That's a real blow to deal with.
And is that normal for the industry, or is Apollo Tyres, are they feeling it worse than everyone else?
That's a good question. We need more data to really know that. But even if it's happening to everyone, the question is, how well can Apollo Tyres adjust, right?
Right.
Can they raise prices for customers to make up for it? Can they find different materials or tweak their manufacturing to make it more efficient?
Right.
These are the strategic things we need to think about.
Exactly, yeah. And speaking of strategic moves,
Yes.
that board meeting outcome document
Uh-huh.
mentions that they're going to raise funds through, it's called non-convertible debentures, or NCDs.
NCDs.
Aiming for up to $10,000 million. I'm not going to lie, finance isn't my strongest suit. Can you explain, what are NCDs?
Yeah.
Why would a company decide to use them?
Sure. Imagine you're Apollo Tyres and you need a bunch of cash for something big, like, building new factories or launching a brand new tire line.
Right.
NCDs are a way to get that cash. They're basically loans. But unlike some loans, these can't be turned into shares of the company.
Okay.
Think of them like those IOU notes, but with a set interest rate attached. Investors give Apollo Tyres money. Apollo Tyres says, okay, we'll pay you back, plus some extra, interest over a certain time period.
So they get money without giving away ownership.
Exactly.
Got it. But that also means they're taking on more debt, right?
Right.
And we saw their net debt has already kind of crept up
Yes.
on their consolidated cash flow and balance sheet highlights.
Uh-huh.
Should we be worried about that?
It depends, right?
Okay.
Debt isn't always a bad thing. Many companies actually use it strategically to help them grow.
Yeah.
It's about finding the right balance. Too much debt, and you're in trouble if interest rates go up or the economy takes a downturn. The number to really watch is their debt to EBITDA ratio.
Okay.
It's a way of seeing how easily they can repay their debt using the money they're making.
Like a stress test for how healthy they are financially.
Exactly. Right now, their debt to EBITDA is 0.8x.
Okay.
Basically means they could, in theory, pay off all their debt in under a year using their current earnings. Obviously, that's simplified and things can change quickly in business, but for the moment, it looks manageable.
Right. So debt is something to keep our eyes on, but it's not a huge red flag yet. Okay. So let's zoom in on their performance in different regions. What are you seeing there?
One of the most interesting things is how differently things are going in India compared to Europe.
Oh.
In India, they're seeing solid growth, especially in replacement tire sales,
Okay.
particularly the truck and bus radial and farm segments.
Interesting.
Those saw double-digit growth. That's really something.
Wow, yeah. I mean, it makes you wonder, what's driving that, right?
Yeah.
Is it a strong, agricultural sector? Are they spending a lot more on infrastructure?
Exactly.
Why are all those trucks, buses, and farm vehicles suddenly needing so many new tires?
Yeah, it gives us a little peek into what's happening in India's economy, maybe hinting at some growth areas for Apollo Tyres.
Yeah.
It's not all good news, though.
Yeah.
Let's flip over to Europe.
Okay, yeah. Europe seems like a different story. Consolidated revenue is up a bit, but if you take out their online tire shop, Reifencon,
Right.
the European market's basically flat. 0.8% growth, barely moving.
Yeah.
Why is it so sluggish there?
Well, we've already talked about those rising raw material costs. That's definitely part of it. But it could also be a combination of things, like maybe the European economy is slowing down, maybe competition's getting tougher, or maybe even just like customers are changing what they want in tires. It's complicated, and we'll have to see how Apollo Tyres adapts to all that.
So India, they're riding a wave. Europe, they're facing headwinds. And we've got all these financial puzzle pieces to try to fit together. It's a lot to untangle.
Yeah, definitely. And we haven't even dived into their specific strategies and plans for innovation.
Yeah, there's a lot more to unpack. You're absolutely right.
We're just getting started.
Stay tuned for part 2 of our deep dive into Apollo Tyres' Q2 results. We'll be back with more in just a bit.
So let's circle back to those financial statements.
Okay.
I think you'll find them pretty interesting.
Okay.
They give us like a peek behind the scenes,
Right.
showing us how Apollo Tyres is managing all its money and how they're dealing with the challenges we've been talking about.
Okay, so you've definitely got me curious.
All right.
I'll admit, financial statements can feel like a secret code to me sometimes.
Yeah.
What kind of hidden messages are you seeing in there?
Well, one thing that jumps out right away
Okay.
in the profit and loss quarterly consolidated statement is the breakdown of their expenses.
Okay.
Raw materials cost them a lot this quarter,
Yeah.
like $35,565 million.
Okay.
That's up from $34,096 million last year,
Right.
which, isn't a surprise given those raw material price hikes we talked about.
So it's like they're trying to bake a cake, but the price of flour keeps going up.
Exactly.
No wonder their margins are feeling squeezed.
Yeah, and it's not just raw materials.
Right.
Staff costs and other expenses have also gone up compared to last year.
Huh.
It's a classic example of cost pressures eating away at profits.
But they have been trying to deal with that by raising prices, haven't they?
Right.
We saw that mentioned in the Operating Highlights India slide.
Yeah, they have. But the question is, have those price increases been enough
Right.
to offset those rising costs?
Yeah.
The fact that their EBITDA margin has shrunk
Right.
suggests that they might be having a tough time finding that right balance.
Oi.
It's a delicate balancing act.
Yeah.
Raise prices too high and you risk scaring off customers.
Yep.
Don't raise them enough and your profits take a hit.
Yeah, it's a tough spot to be in.
It is.
So there's one thing on the consolidated profit and loss statement that's kind of confusing to me.
Okay.
It says exceptional items,
Uh-huh.
and it shows a charge of $52 million this quarter.
Okay.
What are exceptional items?
So exceptional items are usually like one-time things
Okay.
that are outside of the company's normal day-to-day business.
Uh-huh.
Think of it like an unexpected expense,
Right.
maybe a legal settlement or having to write down the value of an asset.
So it's like a wild card entry on their financial statement.
Exactly.
Could be good, it could be bad, but we don't really have enough info to say.
Yeah, we'd need more context. Right.
To understand it fully, we
Okay.
might find that in the notes to the financial statements.
Okay.
Or maybe it was mentioned in what management said during their earnings call?
Okay, so for now, it's a bit of a mystery.
Yeah, a bit of a black box.
Let's move on to the consolidated cash flow and balance sheet highlights.
Okay.
Remember we were talking about their net debt increasing
Yes.
and whether or not that's something to worry about?
Right.
Well, the cash flow statement gives us a little more info about that.
Okay.
Turns out Apollo Tyres had negative free cash flow of $10 billion during the first half of the fiscal year.
Negative free cash flow.
Yeah, I have to admit, that doesn't sound very good.
No, it doesn't.
What does that actually mean?
Okay.
And should we be concerned?
So free cash flow is basically the cash a company has left over
Okay.
after paying for its operating expenses
Okay.
and capital expenditures.
Mm-hmm.
Those investments in things like new factories or
Right.
equipment.
Right. Negative free cash flow means they're spending more cash
Okay.
than they're bringing in from their core business operations.
But how can they have negative free cash flow if their revenue is growing?
Right.
That seems kind of counterintuitive.
That's a great question.
Yeah.
It really shows how important it is to look beyond just that top-line revenue number.
Okay.
Free cash flow takes into account a bunch of other things,
Yeah.
including changes in working capital,
Right.
like if they're building up inventory
Yeah.
and debt repayments.
So even though they're selling more, they might be burning through cash because of other things.
Exactly.
Should investors be worried about this negative free cash flow situation?
It's definitely something to watch closely. If it continues, it could be a sign that the company is overspending on growth initiatives
Right.
or maybe not managing their finances as well as they could be.
Okay.
It's worth noting, though,
Yeah.
that companies sometimes go through periods of negative free cash flow, especially if they're investing heavily in future growth.
So it's not an immediate red flag,
Right.
but it's definitely something to investigate further.
Definitely something to keep an eye on.
Now, let's look at a document that people often overlook,
Okay.
but can tell us a lot.
Uh-huh.
It's called the Statement of Security Cover.
Okay.
This document lays out how Apollo Tyres is securing its debts,
Right.
giving us a peek behind the curtain at their financial maneuvering.
Interesting.
What's going on back there?
Well, remember those non-convertible debentures they're planning to issue?
Yes.
The statement shows that some of that money,
Okay.
specifically $4,989.67 million,
All right.
will be backed by what's called an exclusive charge
Okay.
on some of their property, plant, and equipment.
Okay, break that down for me.
Sure.
What does exclusive charge mean in simple terms?
Imagine you're taking out a loan to buy a house.
Right.
The bank might ask you to put up your house as collateral,
Yeah.
meaning if you can't pay back the loan, they have the right to take your house.
Yeah.
It's how the lender protects their investment.
So Apollo Tyres is basically doing the same thing with their factories and equipment.
Exactly.
They're pledging those assets as security to get this funding.
Right.
It shows that they're serious about getting the money they need for those strategic initiatives.
Yeah.
But it also means that those initiatives really need to succeed. Because if things go bad, those assets could be at risk.
They could be. The statement also mentions something called a pari passu charge.
Yes.
What's that all about?
That's when multiple lenders have an equal claim on the same assets.
Okay.
If the borrower defaults.
Okay.
Let's say you and your neighbor both take out loans from the same bank.
Right.
And you both use your cars as collateral.
Okay.
If both of you can't pay back the loans,
Right.
the bank has an equal right to take both of your cars.
So it's like sharing collateral.
Yeah, like sharing collateral. And Apollo Tyres has used this pari passu charge for other non-convertible debentures and secured term loans.
Right.
So there's like a whole web of financial obligations and assets tied together.
It is a web.
It really makes you realize how much is going on behind the scenes to keep a company running.
Absolutely.
Yeah, these documents give us a fascinating look into the world of corporate finance.
They do.
And all the decisions companies make to manage their money and grow.
Right.
But we've only just scratched the surface.
Yeah, there's still a lot more to uncover.
You're right. Stay tuned for part 3,
Okay.
where we'll dig into those strategic initiatives
All right.
and try to put together the full picture of Apollo Tyres' future prospects. Okay, so we're back for the final part of our deep dive into Apollo Tyres' Q2 performance.
All right.
We've talked about their revenue, profitability, debt, those weird exceptional items.
Right.
But what about, like, their actual strategy?
Yeah.
What are they actually doing to deal with all these challenges and set themselves up for success in the future?
That's the real question, isn't it?
Yeah.
Are they just reacting to what's happening, or are they actively trying to control their own destiny?
Right.
Let's go back to the operating highlights India slide for a second.
Okay.
Remember, it talked about those price increases they put in place
Mm-hmm.
to try and counter those rising raw material costs?
Yeah.
But we also saw that those price hikes haven't been quite enough
Right.
to completely offset the pressure on their margins.
Yeah. So what else are they doing?
Well, they keep mentioning a focus on business fundamentals, cost control, and free cash flow generation.
Okay. Those sound like, typical corporate buzzwords.
It do.
What do they actually mean in practice?
Well, it's all about going back to basics,
Okay.
making sure every part of their business is running as efficiently as it possibly can.
Okay.
Focus on business fundamentals could mean things like really streamlining their supply chain,
Right.
optimizing their production processes,
Okay.
even like renegotiating contracts with suppliers to get better deals.
Mhm.
It's about squeezing out every last bit of value from what they're already doing.
So, like, tightening the belt and trimming the fat.
Yeah, exactly.
Okay. What about cost control? Isn't that basically the same thing?
Not necessarily.
Yeah.
Cost control might involve more specific actions,
Okay.
like cutting down on overhead expenses,
Right.
scrutinizing their marketing budgets,
Yeah.
maybe even putting energy-saving measures in place at their factories.
Right.
It's about really being mindful of where every rupee is going
Mm-hmm.
and finding ways to cut back on any spending that's not absolutely necessary.
Okay. And then there's free cash flow generation.
Yeah.
That's the one that really stood out to me.
Right.
We know they're currently in the negative.
Yes.
What's their plan to fix that?
Well, that's the million-dollar question, isn't it?
Yeah.
To get back into positive free cash flow territory in this environment,
Right.
it's going to take a multi-pronged approach.
Okay.
It might even involve some tough choices.
Like?
Well, they might need to cut back on capital expenditures for a while.
Okay.
You know, those expansion plans we talked about?
Okay.
They might have to put some of those on hold
Yeah.
until their finances are looking a bit healthier.
So prioritizing their financial stability over, like, super aggressive growth
Exactly.
for the time being.
Yeah, for now.
That makes sense.
Uh-huh.
Now, the presentation mentions their innovation strategies,
Right.
but they don't really give us much to go on.
It's a little vague.
We talked about how they're focusing on more premium tires in Europe,
Yeah.
but are there any other hints about what they're doing in terms of innovation?
One thing that caught my eye is they're putting a lot of emphasis on sustainability.
Oh, interesting.
So this could mean that they're putting money into R&D
Right.
to develop more eco-friendly tires,
Okay.
maybe with lower rolling resistance, which helps with fuel efficiency,
Yeah, yeah.
or even tires made from more sustainable materials.
That makes sense. Sustainability seems like it's becoming more and more important to consumers these days.
Absolutely.
So it could be good for the planet and good for business.
Exactly.
It's a win-win.
Yeah, and remember, innovation isn't always about creating something completely new.
Right.
It can also be about making small improvements to existing products.
Yeah,
Or
yeah.
figuring out more efficient ways to manufacture them.
So there could be a lot of innovation going on behind the scenes that we don't even know about.
Exactly.
Okay, so the innovation piece is still a bit of a mystery for now,
Uh-huh.
but there's one more thing I want to circle back to.
Okay.
Those non-convertible debentures.
Right.
They're raising 10,000 million rupees.
A lot of money.
What are they planning to do with all that cash?
That's the big question.
Yeah.
The outcome of board meeting document just says it'll be used for general corporate purposes.
Yeah, which is pretty vague.
Yeah, it doesn't give us a lot to go on.
It could mean anything.
It really could.
But based on what we've seen so far, it's probably safe to assume that at least some of that money
Mm-hmm.
will go towards addressing those working capital needs we talked about.
Right.
Maybe they need to build up their inventory
Okay.
to meet that growing demand in India.
Yeah.
Or they might use some of it to refinance existing debt,
Right.
especially if they can get better interest rates. And maybe some of it will be invested in those growth initiatives and innovation strategies.
Possibly.
We'll have to wait and see how it all shakes out.
Yeah, it'll be interesting to watch how they use that money in the coming quarters.
Definitely.
Do they go all in on India? Do they make some strategic acquisitions? Do they really ramp up their sustainability efforts?
Yeah, there are a lot of different possibilities.
There are a lot of options.
So I think we've covered a lot of ground in this deep dive.
We have.
We've looked at their financials, their debt situation,
Mm-hmm.
and even gotten a little insight into their strategic thinking.
Uh-huh.
It's been quite a journey.
It has.
What's the most important thing you want our listeners to take away from all this?
I think the biggest takeaway is to always look at financial results with a critical eye.
Okay.
Don't just focus on the headline numbers.
Yeah.
Dig a little deeper.
Right.
Look at the trends, the challenges, and the strategic decisions that are being made.
Right.
It's about understanding the whole story.
Yeah, not just skimming the surface.
Exactly.
And that's what we try to do here on the Deep Dive,
That's our goal.
to give you the knowledge and insights you need
Exactly.
to make informed decisions.
We hope you enjoyed this deep dive into Apollo Tyres' Q2 performance.
I think it was a good one.
Yeah, me too.
And remember, the conversation doesn't have to end here.
Right.
Keep an eye on their future announcements.
Yes.
Track those key metrics
Uh-huh.
and see how the story unfolds.
There's always more to learn and discover.
That's right. Thanks for joining us.
It's been a pleasure.